Alright guys, welcome to RTP Trading, and today we're going to go through all the blocks. We're going to go through what my definition of it is, why I think they do tend to hold, and some examples and how to optimize them and things to look out for. But realistically, my goal in general, every single video is, if I can help you by just 1% in your trading journey, then to me that's job done. Sometimes I ramble on a little bit because I'm a bit more passionate, but hopefully it makes sense to you. So we're going to get through it. All the block definition now. I've watched hundreds of YouTube videos, different creators and whatnot, and people have their own different twists on it, what they value, what they look for, how they define it, etc. etc. Now, originally it did come from ICT, but the more I kind of looked into it, it turns out that my definition of an order block is closer to a ICT turtle soup. Does it make a difference what you call any of these? No. So ignore the name of it, but just follow along and pay attention to what I'm going to do in the charts and what I'm basically saying. Now, the way I'd kind of define an order block is a manipulation or a purposeful buy to sell or a sell to buy. So the way I'd kind of describe it is very obvious. If we have this sideways market going on, right? Naturally, what do we have? I'm going to delete this, try and neaten it up a little bit. You're going to have a bunch of buy orders above this, make them green, and you're going to have a bunch of sell orders below these. Now, you would have heard this many times, so I'll be quick with the way I do it, but my definition is a move that is fake, well, in hindsight, right, but ideally that's what you're anticipating, and the purpose is to grab the liquidity and then go up, right? So this little move here, this manipulation, this sell to buy is an order block for me. Now, why should it happen and why should this level hold? Well, imagine there's only one person controlling the market, right? Realistically, it's banks, institutions, hedge funds, all of that stuff, but to simplify it, it's just one person. And now if he's looking for buys, then he needs a load of sellers to actually buy from. So where do you see a bunch of sellers? Well, loads of people would be looking at this as some support, and then other people would be looking at this as resistance. So naturally, as price comes down to support, they'll be buying, and their sell orders or their sell stops are below. So what this manipulation is that sell-off in order to trigger all of these buy orders, or sell orders, but with the intent to actually go higher. So here we open up these strong buy positions. Now, why do we return to this order block? Well, if I've purposely sold, let's say £1 million worth of whatever, and I've bought up about 5 million, well, I don't want this £1 million sell to be at a loss. So I've come back down to this rough price range, right? Closed as much as I can, load up on another set of buys and look to go higher. Where are we going higher to? Well, somewhere where there is buy orders. Why? Because to get out of my buy positions, we need to look for sellers. Well, to get out of my buy positions, I need to sell. Where do I find buyers to sell to? Here, the liquidity. So that's the principle of it. Now, something that's very misunderstood, and I messed around for a while, and obviously I kind of come to my realizations. It's not every level of liquidity you're looking to get swept and to be like, oh, there's an order block here, order block there. So how do we refine them? Well, it's liquidity that makes sense. So this makes sense because loads of people see this as support and resistance. But what I even prefer more is your standard trend line liquidities. Why? Because most people see this as a break of structure, new low, pull back, new low. So people naturally buy within this zone, right? And again, where do they place their stops? They sell from the zone. Where do they place their stops? It's just above. So you've got a bunch of orders above it. I like when price just comes over, manipulates those orders. Here we sweep this low, or this high, sorry. I keep getting it lows and highs and stuff mumbled up, but just follow the chart. And then we carry on down. And this is just to fund that extra move down. So to me, this whole zone should be way more protected than standard lows and highs. And that's what I mean about liquidity making sense. So I'll run you through an example. and kind of how I look for it. So I've got this random chart, and I'll show you one that happened this morning actually. But what do we have here from a perspective of Euro Aussie? We've got this high, pullback, high, pullback, high. Right, now where, I'll just leave this on actually, where is the most amount of stop orders? Well, there's going to be some below these lows and maybe even some below these wicks here, just because some people might even see this as a low in itself. Completely fine if you do. Right, so this is full of orders. Now what do we actually do? Well, we pull back and loads of people see this as a buy-in zone. Alright, so let me just make it a little bit lighter. They would look at this and they would buy. Buy. I'm looking to this new high here or even higher, whatever, and this is their setup. But again, where are their stops going? Just below this low or even below this low. So what does price do? Well, we come down and we manipulate, we take out these orders. We have sold with intent in order to buy. Now, where do I define my order block? To me, it's that last move down before the move up. So there's two ways you can go about it. It's what you value. You can either class this whole move as the move down, or you can go off almost a candle to candle basis where it's this move down. Or if you really want to kind of zoom in on this, you can argue, because from this candle price went down, up, and then down again here, you know, realistically within this range is an order block. But to me, this little red candle here is the order block, the whole move down. I don't like specifying it just to the candle body and the last red candle. That's just my definition of what works for me. So rather than me anticipating this grey zone to hold, I anticipate this blue zone to hold. And as price comes in here, you can have a look for confirmations or whatever, but you can anticipate that this low here should hold in comparison to any of these lows, as it grabs liquidity and we've got a clear sell to buy. Obviously we've come in with decent strength candles. It helps, and it helps if you have a bullish bias as well. So that's quite a nice clean example. They're not going to happen as often. There's going to be many that are, you know, not the best and stuff like that. I want to see like a double take one as well. There's a few different ones actually, but yeah, I'm just going to scroll through, find a few more examples, and maybe speak about what actually I tend to look forward to most. But those trendline ones are my favorite ones. So for example, you've got these. If these were to get swept, then I just like to take those sort of setups. You've got instances where, I mean, it's always going to be choppy. So you've got stuff like this, right? Now, you've got this move up, and then you've got these weak highs here. Let me just draw it a bit cleaner. Right, there's a few wicks. It's really scrappy, I get that, but there's quite an obvious level of support here. It's almost like a trend line slash support, whatever you want to call it. But I think we can all agree there's a stack of orders here. People will see this as, oh my god, support is held 1, 2, 3, 4 times. Keep going, keep going. So people naturally go and buy, especially this high close. It would incentivize people to buy because, oh, we've broken out of a range. This support should definitely hold. So what do? We sweep all of this liquidity with a move that originates from here. So I'm just going to draw this as like the last kind of support line if you include all of these. But what happens is we sweep this liquidity, but where does this originate from? It originates from here. Now, because we don't break and close above it, you know, price carries on down, and eventually this would be our order block in real time. Let me actually go into replay mode. So in real time, this would be our anticipated order block. So if we close above this, this zone should be safe. However, what we do is what I call a double take, where we hit a new low here, sweeping the liquidity twice. Now, you want to be careful the distance between this low and how far we're sweeping, because it could just be just a new low at that point. But now my order block changes because this is the new low and this is the origin. So my order block becomes this. Now I'll be waiting for a close above this level. So we'll just play a little bit there. So as soon as we close above this level, this zone to me should be safe. Now, I know you can argue that immediately after the close we pull back and we go. To me, this will still be valid. So unless you're kind of taking it on entry, but you come down, you'd wait for price to retrace. Again, I don't know if we don't actually, well, there's some people singing outside, enjoy. But we eventually pull back. Eventually we pull back, there you go. And we do something very similar where actually we take this liquidity with this move down and we end up going higher. Right, so you can make the case this is an order block as well. Whether we tap into it, whether it works, I don't know. But that's the principle, that's the concept. And I'll show you one last one just because it kind of happened. And you can see you can ride it up to the high. Is every move going to be the biggest move in the world? No. But there's different ways to kind of look for and optimize it. And there was one on New Zealand dollar which I was looking for this morning, but I just didn't really get in the end. So it was on the 5 minute. I had a bearish bias. Now I was anticipating, for different reasons, this zone to be something of interest, but what we had was a nice little bit of liquidity here as a stack. Right, now what I'm going to do is I'm going to draw these as horizontal lines just to kind of reiterate the point, and I'll be a bit more specific with it. But typically when there's a few levels overlapping, I just draw it as a trend line. But these levels are liquidity. Why? Because bigger scheme of things, you've got a downtrend, so people are placing a bunch of stops above these. Right, they see this as a new low, there's loads of stops above, and they see this downtrend continuing. So I was looking for some sort of confirmation after a sweep. Ideally we tapped into this blue zone, which we just missed, but we'll see how you can play it on the 1 minute. So, you know, if that's my liquidity, what do? Well, this liquidity gets swept there, right? We go above all of that liquidity at once. Now, where is the origin of this whole, well, this liquidity sweep? There's a few places for you to actually argue. There is either this whole move there, that is an order block, which you see that as soon as we break below, we pull back a little bit and we go flying afterwards. Or if you see this as kind of like a little stopping point, this red candle, or maybe even this wick here, so you can be really detailed into how much you go into this. This could be your order block, depending on where you see your origin, or this little red candle. I think it's a bit clearer on FXCM. I think it's a little bit there. You can see the candles a little bit clearer, and you can see that's what I was looking for this morning. But this would have been an order block that if that just tapped a little bit higher, I would have been very interested in selling. And you can see it runs a decent amount, and great, hindsight's great, whatever, but you would have had some sort of setup where if you want to take it at the start of the order block or halfway through, there's so many variations you can do. I'm trying to just give you ideas. Stop a little bit above, give yourself some space, and target the lows. This would have been my target here, my first target. Target 2 would have been a bit lower, but you can see how you can get a decent running trade, but the confidence is there that this level should hold. So I do hope you go on about and practice all these concepts yourself, and you're going to find so many different things. But my advice, make sure the liquidity makes sense per your analysis. If this is what and how you analyze your markets with, you know, liquidity and fair value gaps, keep an eye on the strength of the moves, the breaks of the structure, the breaks of the order block. If it's a double take or a triple take even, is it as good? From my experience, no, but there's always going to be some order blocks that in that kind of double take where they do work. For example, you've got an option here. Again, I know price doesn't necessarily pull back to this, but here we sweep this level of liquidity, and you can argue that this is a very small trend line type liquidity. Is it the best? No, but if that is part of your kind of strategy to take these aggressive order blocks, then go ahead by all means. But it's about you figuring it out, testing it, replay mode, track some data on it, and have a look whether these make sense to you. Personally, if this didn't exist, I'm just going to kind of black it out as much as I can. If this didn't exist, I'll just leave it like that. If this didn't exist, for me, that's not an order block, because this liquidity doesn't necessarily make sense, right? Yes, there's some sort of orders above that level, but is there a lot of people from a support and resistance perspective, right, selling at that level? Probably not. So to me, I don't really value that as high, even though we have swept some sort of liquidity. Now, I could maybe be convinced because of this little very short downtrend, which I know we're on the 1 minute, but on the lower time frames would be a bit clearer. I can understand that. However, it's not my preference. In my experience, they just don't work out as well. So I would rather be fussy and wait longer and longer than, you know, carrying on. Now on the flip side, I'll show you a losing example. Actually, if you carry on here, we've got this new low here, new low, new low. So naturally there's a bunch of liquidity above this level, about this little level, which is not as significant, and even this level. So what do? We do sweep it, right? We sweep it from this move here. Oh, bad example now. But this is the move that initiates that potential order block. And I know we don't close here, but just for the sake of the example, if we was to close here, this would be a valid order block. And in this case, it doesn't work. However, if you've seen some of the blue lines I've drawn for my higher time frame perspective, you know, to me, this was kind of the target, the blue line there, and the top one, but that was prior. So this blue line was the target. After we have met the target, I don't necessarily think price will go down unless I have a different bias and different outlook on the market to suggest that. So to me, this order block, despite it being valid if it was to be official, I wouldn't have taken, just because of the whole context of the markets, right? Would I take this order block here because we've grabbed this liquidity and we have, you know, forced a move above, strong close below, return, and now we're playing to the downside? No. Even though this is looking likely as a winner and whatnot, I wouldn't take this because I don't have a bias that confirms, oh, price should go down. Just like any other strategy, you're not going to take every order block, every this, every that. It's about you filtering out those A-grade opportunities, giving yourself that best chance of winning and being patient with it. Or on the flip side, if you know that this order block for reasons X, Y, Z are, you know, it's not the best order block, but you still want to give it a go, then look for confirmation within. Go on an even lower time frame and confirm it within, rather than just placing your limit order there and stop above. Go down, see what you can find in here, something that makes sense again, rather than just forcing it and take that move down. So that is pretty much it, really. Don't worry about the definition of order block or what it's called. Define it yourself. Have rules in place whether you're like, this is an order block to me and this is what I value. You might come back in this video and comment, oh, do you know what, I've noticed these strong candles are really good as an order block, or I've noticed it goes up to the halfway point and it doesn't come down, or it does this and does that. You're going to develop these tendencies by yourself, and I encourage that. I'm not here to ever tell you what to do. I'm here to tell you what you can do. Right, try and solve some problem that you might have with your trading. Might be analysis, might be your psychology, but that's what I aim to do. If I can improve your trading by 1%, just like I said at the start of the video, that's my goal. So I do hope you enjoyed. As always, if you got any feedback, let me know in the comments. Let me know if you enjoyed it. Subscribe, like, all of that stuff. But yeah, in a bit, boom.